get the next key levels to watch now from Jason Hunter, head of technical strategy at JPMorgan. He joins us by the phone. So we sold this as you put your bearish view on ice. Tell us more.
Yeah, so the last time I was on, we were talking about this 4,200 inflection that was acting a bit like a bifurcation, where market had rejected it several times through the year so far. And our view was if the market was able to sustain above 4,200 and the leadership started to broaden out, then we would have to take a step back from our bearish view, kind of a live to fight another day type mentality, and wait for the stars to align from the chart reading side. And that would line up with what we think is a macro fundamental backdrop that's not that healthy for the market. So for the time being, more of a neutral type position and waiting for the market to decelerate and form a new top pattern before we could really press that bearish view again.
But you think the rally's intact, I guess, that the trend is intact, and that, I mean, there's some making calls that we're going to hit new highs in the next, I don't know, I mean, we're not that far away now.
That's right. I mean, the market's bumping into the underside of a channel that's defined the rally from the lows back in September, October of last year. And that's roughly 4,600. It's showing some signs of deceleration, but as we wrote in our note last week and into this week, that until we see that deceleration form a more convincing distribution pattern, it's too early to get aggressively negative again. So as you said, the market's trending until it isn't. It's starting to get overbought. Sentiment's starting to get frothy, but that could persist. So we don't want to be early with getting bearish again, particularly since we were wrong, coming into the summer months. We'll wait for that distribution pattern to form, keeping in mind that seasonality starts to turn negative in September and October. So we'll look for that deceleration to form a top pattern, but not move until we see those facts come into evidence.
You want to just explain that a little bit more? When you say, the market's overbought, which people hear all the time, and as you obviously and rightfully suggest, markets can stay overbought for some period of time. Do you have any sort of idea of how long you'd be, willing to accept that this could go?
So I think there's two things. Number one, and as you said, equity markets tend to trade asymmetrically. So bottoms, or as they say, are an event. Tops are a process. Oversold conditions resolve very quickly, where you get these V-shaped bottoms. But as you pointed out, and as we said, overbought conditions could persist for a while. So we don't fade overbought conditions or bullish sentiment. You wait for that to then translate into deceleration of the trend, which then forms a distribution pattern. And like I said, it's a process. It takes time to develop. We're seeing maybe the early stages of that. And then the question is, well, how long do overbought conditions persist? That's variable. That's as long as the fundamentals allow them to. And if we look at the fundamental economic data at the high frequency level, the data starting in mid-May had, for the most part, beat economists' expectations. You look at the JPMorgan U.S. Economic Surprise Data Index. It's been a one-way street since mid-May, much to our dismay, where that's ultimately what stopped us out of our bearish view and allowed the market to push above 4,200 and the participation to broaden out. Small caps start to participate. If the data starts to miss, it's like saying water is wet. I get it, but that's really probably what's going to be required for this to form into a distribution pattern and turn the corner.